Hi, it's Lee and welcome to the Tesla Economist. Tesla finally have enough sales that they can actually start ramping up energy. I think the market has completely forgotten that Tesla is also an energy business, or simply stopped caring. A lot of you often comment that energy is going to be even bigger for Tesla than the car business too. On this channel, we do spend a lot of time focusing on the car business, mainly as we're told so little about the other sides of the businesses, or the future plans and targets for energy. But how about we get some idea, as this business might just be starting to come alive. Tesla's car business is given so much attention it certainly takes the limelight, and rightfully so. Not only has energy basically maintained the same level of deployment over the last 2 years, there's been no profit from it either. In fact, no gross profit, so likely negative net profit. Hardly anything to get excited about. At least not when the auto business is growing and showing such massive profits. However, now Tesla have a large, dedicated manufacturing facility for Megapacks, as there's no longer such an opportunity cost with standard range vehicles. And we've been told that this Megapack facility in Lathrop, California will manufacture 40 gigawatt hours a year in energy storage. To give you some frame of reference, that's enough sales for almost 700,000 standard range Teslas. It was in the Q2 earnings report, I believe this was the first we were officially told that this facility was operational. We are in the process of ramping production at our dedicated Megapack factory to address the growing demand. However, that quarter was an average quarter in deployment. We did see Q3, however, at twice as much energy deployed, and also for a 9% profit margin, up from 0%. Then at the end of October, we heard that supposedly Tesla was already at a run rate of 25 megapacks a day. Each megapack is 3.9 megawatt hours, which is 97.5 megawatt hours a day, or 35 gigawatt hours a year. The same sources say that this production capacity was recent, hence why it wasn't seen in Q3, but something to potentially look forward to in Q4. But 35 gigawatt hours this early, practically at capacity back then, so potentially at capacity now, that seems hard to believe. But bear in mind, the manufacturing process of a Megapack is obviously a lot more simple than an EV. So we don't know, this is new territory. But even if the total output for the entire 2023 is only 35 gigawatt hours, this is going to have a noticeable impact on the company. Tesla used to make Megapacks with the more expensive, more energy-dense nickel cathode, scarce 2170 cell. It was almost a sacrilege putting these cells into energy storage, as they were designed for high-performance EVs. But I guess Tesla just needed to get Megapacks out in order to test the market, and this is the reason Tesla likely deployed so few. Tesla then changed over to LFP with a new version of the Megapack called XL, going from 2170 cells to the much lower cost, safer LFP cells. These cells are far more suited for energy storage, have a low likelihood of catching fire due to lower energy density, and cost a lot less. The disadvantage is they are less energy dense, but that doesn't matter for stationary storage, hence it being the ideal chemistry, thus lowering the costs significantly. And surely one might also assume that a dedicated manufacturing facility at high capacity with massive economies of scale would also reduce the cost a lot too. This has started to get the attention of the Tesla investor community, and some are doing the necessary research. Zero Sum Game 33 on Twitter has gone in depth as to the cost of these Megapacks. He has the cost of the cells at $150 per kilowatt hour, a number that is actually quite high, and it's probably closer to $120, possibly even $100, due to Tesla purchasing in such large quantities from CATL in China. With 3.9 megawatt hours per Megapack, we have $468,000 of sales. Then he's priced the inverters at $356,000 per Megapack, then another $35,500 for other costs, another $21,000 of labor per Megapack, and another $114,000 for shipping. When you add all that together, we get a total of $994,000 per Megapack. That is the cost to Tesla of a Megapack, according to all this. Tesla charge up to $2.6 million for one Megapack, But if you buy multiple, then the price quickly slides down to around 2.1 million and goes as low as 2 million. At 2.1 million, we're at a price per kilowatt hour of $550. However, if each megapack costs just $1 million to produce, we're at a cost of $255 per kilowatt hour, which is a profit of $295 per kilowatt hour. That is a 53% gross margin, which is absolutely amazing. For a frame of reference, the Model 3 rear-wheel drive is $47,000 in the US. If that has $15,000 gross profit, then it profits $250 per kilowatt hour. It probably has slightly more profit than that, but either way, energy gross profit is now comparable with cars. And the profit from the Model 3 in Shanghai would be even less. That should make your head spin if you were concerned about demand for Tesla cars. Cars are not Tesla's product. I keep saying it's battery cells. Tesla have found products that they can make that mean people are willing to pay more for battery cells than Tesla can either produce them for or buy them for. Tesla have managed to make amazing applications for these cells in order to achieve this. Tesla simply make delivery methods of cells that people are willing to pay more for. Elon claims that their true core competency in business will be manufacturing. Therefore, wouldn't we expect Tesla to do an amazing job at manufacturing megapacks, especially when it must be much simpler than manufacturing an electric vehicle? We've already been told there is a massive backlog of megapacks to 2024. Zero-sum Game 33 assumes around 68 gigawatt hours of just backlog. But the thing is, this is an ROI product. You buy a megapack, it saves you money on energy. It stops blackouts for a city. It carries real value. If this product is paying for itself in 3 or 4 years, then it's an incredible return. The South Australian one paid for itself in something like 2.5 years. Do you get it? It's not about demand for vehicles Tesla needs. It's about demand for battery cells and profit per kilowatt hour. If Tesla have got the profit of energy storage to similar levels of cars, then if demand for vehicles did start to drop, they can simply allocate those cells into energy instead. All right, onto the financials. So if Tesla can actually deploy 40 gigawatt hours a year of energy, and each kilowatt hour costs $550 on average, then that is an additional $22 billion in revenue. That's a big number. And then potentially with a 53% gross margin is unbelievable. However, others are saying potentially 40% margins. However, they were using $150 a kilowatt hour. But let's use the more conservative 40% gross margin anyway, as I'm sure it's good enough to cheer us up. It comes to $8.8 billion in gross profit. However, that all goes into operating profit, as there is no reason this should increase OPEX any further. A reminder that the current trailing 12 months of operating profit was just $12.4 billion. This alone would increase that by 70%. That's quite a big jump, I believe. In fact, even if Q4 at this rate can deploy about 5 gigawatt hours, then that could add over $1 billion onto earnings this quarter, something no one is expecting. Then you add on deferred revenue from FSD potentially as well, we could have earnings as high as $6.5 billion, which would take Wall Street by surprise. I'm not sure what PE ratio you can put on energy in this economy, but at around 20, it would add about $200 billion onto the market cap, which is about another $100 onto the stock price. This could be another one of those times when I talk about the Tesla magic and how it never happens where you expect. Everyone's focused on 4680 production ramp or Cybertrucks. Then meanwhile, in the background, Tesla is getting something else done, and it suddenly comes out unexpected. There is always hope with Tesla. There are tons of talented engineers working full-time on an important mission. The company will continue to grow one way or another. Right now, it may be somewhat depressing with what is happening to the stock price, but this company is still looking solid from the fundamentals and is likely to still grow through a recession. I still have more to say about energy too, and how Tesla are able to get these many cells, and potentially a lot more eventually. Energy can grow into something very big, on top of the car business growing too. It won't take long for Tesla to fill the shoes of a $1 trillion company when it's not in a bubble or boom. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.